All right. So if you've ever wondered why you take an entry and at the end of, if you ever wondered why you took an entry and say seconds later, minutes later, hours later, days later, or even weeks later, depending on your style of trading, you get stopped out of the trade, and after getting stopped out of the trade now go in your original direction. If you've ever wondered why that happens so many times, this is the video for you, because on this video we are going to be discussing liquidity, right? We are going to be discussing liquidity, and liquidity is the genesis of all this problem. You taking a trade and it hits stop loss, only to find the trade going back to your predicted direction, but without you on board, right? So this video is actually for you if you're that person, right? So we'll be talking about liquidity. So first off, what is liquidity? In case you're asking. So liquidity is the money that is used to fulfill or complete order. You understand? It is the money that is used to fulfill and complete order. I'm going to break it down as we go further. So on this training, I'm going to try as much as possible to be precise, and I'm going to try as much as possible to break everything you're going to be learning into bits so you can understand perfectly how this thing works. You understand? You can understand liquidity perfectly, because liquidity at the end of the day is the soul of the market. Liquidity is what drives price. Without liquidity, there is no trading in the forex market. Do you understand? So liquidity is what drives price. And why am I saying liquidity is what drives price? You're going to understand very soon, right? So why do you need to understand liquidity? You may be asking, why do you need to understand liquidity? I'll give you an example, and like an example you can easily relate to. Let's say you're trying to get 20 bags of rice in the market, like whichever market you go to buy your food stuff. So let's say you're trying to buy 20 bags of rice from the market. Now, in the market, there has to be someone who is willing to sell at least 20 bags of rice, right? So there has to be buyers. There has to be you are the buyer, right? You want to buy 20 bags of rice. So there has to be a seller at the other end of the market that is willing to sell 20 bags of rice to you. Because if there is no seller of that 20 bags of rice, that order is not going to be fulfilled. Transaction is not going to happen. Right? Transaction is not going to happen. So the same thing with the forex market. If someone at the other end of the market is trying to buy, or a group of people, let's say the people that dominate the forex market, let's say JP Morgan, Deutsche Bank, all these guys that dominate the forex market, if they are trying to, let's say they are trying to buy 1,000 units of Euro USD, there has to be someone at the other end of the market that is willing, whether willing or not, that will shall sell the 1,000 units of Euro USD, so the order can be fulfilled. So which means if a group of people are trying to buy a currency pair, there has to be a group of people at the other end of the market that is also selling that currency pair at that specific price. I don't know if that makes sense, because if there is no seller of a specific pair and there is a buyer, the order is not going to merge and complete. So liquidity is what makes this possible. Liquidity is what makes merging of this order become a reality, right? So this simply means for people that are going to, for winners of the forex market to exist, they have to be losers. Because if I'm buying a pair, and let's say I'm buying I'm buying Euro USD at 1.100. And someone is also selling to me at 1.100. And let's say after like 5 minutes or 10 minutes or 15 minutes, the price moves towards 1.200. The person who sold to me at 1.100 has definitely lose, and I have made money from that market. So it means, if for winners to exist, there also has to be losers. So if you are losing in the forex market, it means there's someone or a group of people at the other end of the market who are benefiting from your loss. That is simply what it means, guys. So I want you to open your mind to this thing, because it is very, very important. This is the major reason why you lose. So if everybody is trying to buy a currency pair, then the order is not going to be fulfilled, which is why the market makers, people that control the market, they are going to try as much as possible to engineer price in a way that, you know, sorry, my bad. They are going to try as much as possible to engineer price in a way that makes it look like, if you are going to sell a particular pair, they will engineer the price in a way that makes it look like, oh, this pair is going to buy, or at a specific point, they are going to make it look like this pair is going to sell. So, but what will happen is that the price will shoot up, take out the people that sold early. I'm going to give you a graphical representation of that. Take out the people that are willing, people that are selling early, and what induce buyers to make it look like it's going to buy. So what will happen is, when they take out the sellers and they induce buyers, they will not sell. So the people that sold early, they become a buyer, because once you buy a pair and it eats your stop loss, or you manually close the trade, it means you sold at the end of the day, because you buy the pair, then you have to sell to leave the market, to exit the market. You understand? To exit the market, you have to sell, right? So so once you become a buyer at that point. So people that are trying to, let's say 1,000 units of people 1,000 people are trying to buy, let's say a group of people are trying to buy 1,000 units of Euro USD, and there is only 500 people that are 500 units that are willing to be sold at that point in time. So there have to be enough buyers. There have to be the exact number of that 1,000 units of Euro USD that is willing to be sold. So buyers and sellers can merge, and so the orders can be completed. So for that to happen, they have to engineer the price in a way that makes it look like, oh, at this early, let me give you a graphical representation so you can understand this perfectly. So this is a I'm very terrible when it comes to drawing. Don't mind. So this is high, low, higher, low, higher, low, higher, high. So what will happen is, in this market scenario now, this is the bullish trend, obviously. What the market makers are going to do is what they would, engineer the price in a way that makes it look like the price is going to buy from it, because this looks like what? A demand zone. So they will engineer the price in a way that makes it look like the price is going to buy. In fact, there will be some sort of reaction. There will be this lower time frame, what's it called, break of structure. And what will happen? They would what? They will shoot the price lower to take out the stop loss here. Because when you are buying from here, your stop losses are here. Your stop losses are here. They would what? So when they do this, what are people saying? People are saying break of structure. That, oh, this is going to sell, right? So sellers are like, oh, we are going to sell. The people that buy from here have lost money. Sellers here are induced. They're like, oh, they are going to sell. So what will not happen is what? Price comes down a little bit, and what? In fact, it might even give at this point, at this because they'll be looking at this place to sell. You might even give some sort of reaction here before it shoots up, so it can induce more sellers. So once that happens, what will happen? Boom, price what takes out this high again, takes out these sellers, but you are not. You remember you bought here, but you are not part of this move. Hmm? You are not part of this move. So both early buyers and sellers are what are out of the trade. So this is why you constantly lose in the forex markets. Simple as that. The same thing happens in the if you are trading support and resistance. This is a very terrible drawing. You are trading support and resistance. So this is the support, or this is the trend line. Whether support and resistance or trend line, this is the support. Some people will see this as support. Some people will see this as what? Support, and some people will see this as trend line. So what will happen is you are trying to buy from here because we have first touch, second touch, and even third touch. So you would what? You waiting. Price is going to be giving some reaction here that he's going to buy. What will happen? Price will go down. It will not look as if this place has been broken. This is a this support has turned to resistance, and price will even do something like this. Come to this resistance, give some reaction to induce more sellers, and what shoot up. And this move here is the original move. This move here is the original move. This is the original. These are the original moves. These are what the market wants to do, but they want to do this in a way that the order balances up. Like there is enough buyers, there is enough sellers for buyers and sellers to merge. There is enough sellers for there is enough sellers for the amount of units that are going to be bought, and there is enough buyers for the amount of units that are going to be sold. So this is why you need to understand liquidity. It is very, very important. Very, 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 very important. Because once you understand this liquidity, you are able to reduce your losses drastically. Because think about it. People that most people are going to be buying at this demand zone here because it is a break of structure, obviously, and this is a low. But what most people don't know is that below here there are tons of liquidity to be taken out, and what markets will do is tap this demand that is below this liquidity here. After tapping it, then it goes up, right? So I'm going to be showing you an example very soon, but I just want you to understand this perfectly. It is very, very important you do so. It is very, very important you do so. So once you understand how liquidity works, you drastically reduce your losses. So and overall you increase your win rates, because when your losses reduce, your win rates increases by far, right? So I'm going to give you an example of some of the trade that I took, right? So let's go back. Let's go to this is gold. This is a gold trade. So you may be asking why this is a 1:9 trade, right? This means if you are risking $10 on this trade, you are getting back $90. And this is also a 1:3 trade, which means if you are risking $10, you are getting back $30 in return as profits. So why did I take this trade? Let's do a little bit of analysis here. So we have high, we have low, we have higher high, we have higher low, we have higher high, we have what? Higher low, we have higher high, we have what? We have higher low, we have what? Higher high, we have what? Lower low, right? In fact, we also have higher high and higher low. Because if you go to like, let's say 2 hours, what's it called? It will be much more legible. You see, you can see it clearly here now, right? Now, why did I buy from here? Why not from here? Because this is the closest. Because this is the closest demand zone, and most people are going to obviously buy from here, but they are going to lose money when they buy from here. Why? Number one, this is a trend line. This are bunch of there are a bunch of liquidity sitting below here. This is a trend line. First touch, second touch, touch. So people will be looking to also what buy from here at this point in time, right? People will be looking to buy from here, but there are liquidity here. Also, these are a bunch of liquidity. This is also like another trend line. These are also bunch of liquidity. So this to me is an invalid place to buy from. So which is why price comes down, taps into this demand zone. And why is this demand zone powerful? This demand zone has previously taken out some form of liquidity here. So this is a protected low for me. It has taken out some liquidity here. So this is a protected low for me. And what did price do? Price taps into this demand zone. And look at the aggressive movement. It moves straight into my what? Into my direction and eats this profit. Very, very amazing trade. There's no hanky panky. But most people have bought from here. This is a demand zone. And what's also happened is that after seeing this break of structure, most people are looking to what? They are looking to sell. So it's liquidity is not complete when there is no inducement. Inducement simply means to fake people or to entice people to take the opposite direction as well. Look at this reaction. And people will be looking to sell at this reaction here. Also, look at this reaction when price gets to this demand zone. Look, gives a little bit of reaction, but what drops take you out. Take people stop losses here and stop losses here as well because people are looking to sell here. See, look at this reaction because this is also like a supply zone. This is also like a supply zone. Look at this reaction. In fact, on a lower time frame, there's also like a break of structure here. So many people lost money here. So many people lost money here. But if you've avoided this 1 and 2, and you understand liquidity to the depth, you would have only taken this win and avoided this one and this one. So out of like you would have avoided 2 losses and also like taking one trade that will give you an amazing results, right? So let me also analyze this one because I took it on 30 minutes. So we have high, we have what? We have low, we have high here, we have low here. But it's what? It gets taken out here. This is also a liquidity here. Because people will be looking to buy around here. If you go lower, people are buying from this side. But what? Price takes them out. When it takes them out, people will be looking at this as oh, we are going to sell. So it's induced sellers. And what? Price what does what? Takes the sellers out as well. So this to me is a protected low, right? Just take note of that. And this has become a new low, right? And it's also a protected low, a very powerful low at that. This is a low. This is also a high. This is also what's a low because this low created a high that breaks this high. But what happened? People. If you go lower, let's say 15 minutes. Let me show you. People will be looking to buy. People will be looking to buy from this point because this is also like a demand zone. In fact, people that are scalpers on 5 minutes, 10 minutes would have taken this trade, would have bought from here. See, look at the reaction when price gets here. But it didn't hold. So it took people, the stop losses here was taken out. So this is also a liquidity and it's close to my demand zone here. So this was why I took this trade. Right? This was why I took this trade. And look at what happened. Price gets into here and price gets into my zone, taps my, what's it called? My demand, and what? Goes up. Give us around 3 risk to reward. Which means if I'm risking $10, I'm getting back $3 as profit. And look at this point, because after breaking this low, most traders are looking at, oh, this is a break of structure, and this place has become what? A supply zone. This place becomes a supply zone. Look at what happened. So it induced sellers as well. So when price gets here, look at the reaction. It's giving, in fact, on a lower time frame, maybe like 1 minute, there's a break of structure here as well, which is meant to what? Induce much more sellers. At the end of the day, what happened? It clears the liquidity above, the stop losses above. So people also, buyers lost money here, sellers lost money here. Simple. But we made money here because we understand how liquidity works. We understand how liquidity works, right? So this is. I want to try as much as possible to. I don't want to make this a very long. What's it called? A very long video, right? I don't want to make this a very long video, right? If you are in my WhatsApp group, I'm going to be talking more and more. I'm going to be dropping content around liquidity at some point in time, right? I also have like a book that I've created on liquidity, right? I think I've just done season 1 and maybe like 7 to 8 episodes in that book, right, of liquidity. So you can ask for, what's it called? You can ask for the book. Just send the person that sent you this video a message to get the book if you want to know more about liquidity. So, and also very, very important, pay attention. This is very, very important. If you also want to learn how to, make thousands of dollars on a monthly basis, with a unique approach. If you want to learn how to make thousands of dollars with a unique approach, just using a starting capital of like less than $100. With less than $100, if you want to make $1,000 monthly with a unique approach, reach out to the person that sent you this video or click the link in the description of this video to access a 23-minute video that shows you how this can be done, right? Or that shows you bit by bit how this is done, right? If you want to earn thousands of dollars monthly with less than $100 starting capital, reach out to whoever sent you this video just reach out to the person and tell the person you want to watch the 23-minute video on how to make thousands of dollars monthly with less than $100 starting capital, or click the link in the description to access the video right away, to access the 23-minute video right away. So that will be all, guys. Have an amazing trading time. Cheers. Ooh, 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 ooh.